Hey everyone, Alex Ionescu here. Welcome to Investor's Guide to the Galaxy. Chicken Genius Singapore sold Tesla stock. Gene Munster, Tesla stock will dip on Wednesday. Elon Musk was not joking when he said funding secured. Although before we start, if you find this video helpful, it would mean a lot to me if you crash the like button and subscribe to my channel. It's totally free and takes just a split second. If you want to show more appreciation, consider subscribing to my Patreon. Now let's dive right into it. Tesla stock price yesterday up 7.74%, year to date up 33%, past year down 53%, past 5 years up 528%. As you can see here from the recent bottom of Tesla stock, it was like 101 and something dollars till yesterday $145. Tesla stock grew way too fast, I think. 43% in a month. The probability is high for a pullback. What goes up must come down eventually. Maybe not today or not tomorrow, but someday in the near future. This is not me saying, but don't you think that some investors who did 43% profit in a month will not sell and mark their profits? Just saying. Gene Munster from Deepwater Asset Management says, and I agree with him, Tesla's auto gross margin 27% in September quarter. He expects Tesla to give guidance somewhere between 15 and 20% for 2023, and that's the piece that he thinks will cause a dip in shares on Wednesday. Let's hear him out.
Gene, from the notes, it sounds like you think Tesla stock hasn't seen the worst of it, that there will be better entry points.
I do believe so, Melissa. And just to put some perspective around this, is this earnings period is an opportunity, a rare opportunity where Tesla needs to get everyone on the same page. I'm still optimistic that this company is undervalued over the long term, but let's talk about Wednesday initially. There's the demand piece and then the profitability piece. On the demand side, we know that the price cut on the all-important Model Y, 30% price cut with the addition of the tax credit, has stoked demand. There's some very primitive tools we can use to look at how much of the demand has been stoked. But if you look at Google Trends, for example, search traffic around Model Y is up double from where it was a week ago. Model 3 is up 50%. And you look at the other EV makers and they're all going down. And so that is an indication that demand is good. Retail investors are picking up on that. Also, the lead times, they've basically been extended out an additional month and a half over the past week. That's also been picked up. So part of this 8% move is anticipation, optimism that the 30% increase or decrease in price for that Model Y is going to have an outsized impact on volume. I expect that to be true. But there's one piece that we don't know as well, and this is to get everyone on the same page, which is the profit. And just to finish the thought, Melissa, is that their automotive gross margins, ex credits, were 27% in the September quarter. I expect them to give guidance somewhere between 15 and 20% for 2023. And that's the piece that I think will cause a dip in shares on Wednesday.
So, Gene, in theory, we should know all this. We know that the margins will have to come down because of these price cuts. That is just math, even if they're selling more cars. And so why wouldn't that be factored into the stock now, even with this run-up? Do you think that maybe it's not factored in enough?
Well, there's a couple reasons. One is that the volume piece, there is, well, let me just take a step back. I think retail is having an impact on Tesla shares here. I think there's an emotional side that plays into that. And I think that one of the emotional pieces is that as you think someone who's optimistic about this, maybe a little bit too optimistic in the near term, would say that the volume is going to create economies of scale that will basically support margins separately. I think that, or make the margins go down not as much as maybe what I believe that they'll go down. That's one piece to it. Another piece where this is just getting people on the same page is that the component supply, the component cost environment has been starting to get more favorable towards Tesla, but we don't know to what extent that is. I just do the simple math, is that the average discount across the board, across all of their vehicles, if you weight it by volume, is close to 15 to 20%. And that is, a lot of that comes from the profit. But Melissa, I think that's the reason why I think you see some of this move here, is that you can kind of build a case where it's not going to be as bad as what I'm predicting.
So, Gene, when you look at the stock and it traded down to that August 2020 level, did that have more to do with Musk's personality being divisive or actually fundamentals in the stock? I'm long the stock, but I do not want to go into earnings. I agree with you. I don't want to go into earnings long, so I'll take a look after the fact. But the idea that it could upside surprise versus downside surprise, I'm erring on the downside surprise. It seems like that's where you are too.
I am on that. Again, big believer in this. I don't want my optimism around the long term to change, and I could get this wrong, and it could be up 10%, but ultimately I'd still be positive. But what has impacted it over the last, what really pushed it lower was, of course, just concern about demand, and then they put the hammer down as on the pricing, and that just kind of gave confirmation. That's why you saw that big dip. So I still believe ultimately they're making the right decision. I would just say this: when you put all this together, I think that they're going to really put other car companies in a tight position in 2023 and 2024. And so, Steve, don't make me give you a mixed message there. I think that this is still a great company. I think that we just got to get everybody on the right page about what the profit profile looks like, because that's been a big part of the rise of Tesla shares over the past 3 years is just this really impressive gross margin.
It appears that Chicken Genius Singapore is on the same boat as Gene Munster. He cleared his long positions, probably on Tesla stock. He doesn't say precisely. Look at what he said on Twitter. Tesla has moved 43% from the bottom in 2 weeks. Cleared my longs. Updated my spreadsheet. Markets been up purely due to liquidity injections. I believe rug pull soon. And he posts his spreadsheet here with the reasoning. Fundamentals 10%, EPS not priced in, technical long 5% down, technical short 5% down, macro regime decline quad 30%, not good, credit spread risk 10% midway, quantitative tightening 30%, not good, liquidity 10% up, strategies, weightage and current, buy hodl 20% weightage, current 0%, hedge weightage 5%, current 7%, cash 50%, current 85%, max decay 10%, current 4%, covered options 10%, current 0, back holding 5%, current 4%. Elon Musk said he had funding to take Tesla private when he floated the idea in 2018, saying that financing from Saudi Arabia's sovereign wealth fund and his own stake in rocket company SpaceX would have provided sufficient capital. With the SpaceX stock alone, I felt funding was secure, Mr. Musk said on Monday in his second day on the stand in a case brought by investors who say they lost money because of his tweet proposing to take the car company private. I'd like to know your opinion on this. Please leave a comment below. If you like this video, please smash that like button so that other people like you see this video, and don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.